All right. Good afternoon, team. Good afternoon. Good afternoon. I hope you're all having a wonderful Sunday so far. I hope you got a good rest from the very rough market conditions. And I hope you are ready for an even crazier week up ahead. Up until now, things have really still contained. And heading into this week is when I think things are really going to get out of hand. What I mean by things getting out of hand is big tech starting the sell off, and UVXY also getting to crazy levels where uh, it'll really trigger a lot of fear in the market. If we look at VIX here, VIX is just a few pennies away from, it's about 35 cents away from 22. And when VIX gets above 22, it usually signifies a lot of volatility, a lot of craziness, as we can see here. And I think heading into this week, it is the most likely ever to get these kind of moves on VIX. So make sure heading into tomorrow or on Tuesday, you do take advantage of buying VIX and hedging against your long positions if you are holding many. And I also do want to note, if you are holding long-term positions, you really don't have to panic like many are doing here. Keep in mind, team, if you even look at the data, there's been that same market crash before where um, just to give you a reference, 2018, where yes, the market did go down for the first couple of months, but from March, that's when we started the sell off, and by October, we were literally back to new all time highs. So you may get some weeks where the market will drop by 5%, some months where the market will drop by 5%, 6%, and then there's going to be a month where the market will literally gain 10 to 12%. So just note, if you have long-term positions, you don't have to panic. I mean, it is good to get out of bad positions, but for the most part, you guys know which sort of positions I'm talking about. Your long term portfolio, you don't gotta touch it. You don't really have to panic. And I'll share the video here with our team in the chat room. But um, like Charlie Munger said, if you can't stomach getting a 50% decline, you're not meant you're just not strong enough to get its rewards, to sort of reward what he said. If you're really not strong enough to deal with the downsides of the market during these conditions, then you don't deserve the rewards that the market provides years and years later. And it doesn't have to be years later. It's just not having a high expectation is usually better, because it means that you're taking a slower approach, you're taking a more steady approach, and that's usually a lot safer. We have these market crashes routinely every couple of years, and there's nothing wrong with that. So just looking at this one also, some may say, oh, this is the end of the bull market, and so and so. That's not true. There's so much more to be seen from the market. And I think this pullback, if anything, is very, very healthy for what is about to come heading into the upcoming years. So you can see this was the pullback we had back in 2022. This is the bear market of 2022. And once we got close to, for this one, that was a major bear market. And the reason why is because we had rates going through the sky. Rates were going up. We had rising rates. We have quantitative tightening where the money was flowing out of everywhere else. And it was very tough. It was very tough for everybody because, we had quantitative tightening. So now here we are. The rates have been high for some time, and I think we are heading into a time where the rates can go down over the upcoming 2 years. I mean, the Fed always, sorry, I know I haven't gone over the S&P 500 analysis, but I do want to give you just a little bit of guidance through the months to come, that once we do get that pullback, these levels that we are trading at are going to be regained almost immediately. That's just the nature of the market. I'll show you that over the years, you're going to be a winner whenever we get these pullbacks here, and um, you get a healthy correction that usually just leads to higher and higher market prices. And I think this is no different. And if anything, we're we've already seen, I would say, probably half or more than half by now. So yeah, we'll have a little bit of more downside, I believe, and from there the market will get another rally that'll last years, and it's going to be great. So I'm really, really excited. I think heading into this week, we saw financials crashing last week. Rain Bond got us in some really nice trades with financials, and this worked out really, really well. And I think I also did share it in the market analysis team. For those of you that are new to our Discord and our mentorship team as well, please make sure you're always checking out the market analysis as well as the weekly watch list. This is where we share a lot of very great updates and market navigation that you can take advantage of and make some amazing trades happen. So you can see we talked about XLF update. First, we said XLF is a great buy here, and we did buy JPM, BAC, WFC calls, and we banked on these. And then the market did go up. So we went from here. We went from here all the way up here on financials. And then we sent out another update on financials saying financials have met our target. And now we are inside of this supply zone. We expect the market to pretty much go sideways. This is where we stay on the sidelines. Now, there was some bullish momentum brewing there, but you can see now we did get a big rejection. And I think tech is going to be declining this week as well. I don't see it doing much. I think whatever small rebound that we get is going to continue to sell off down to 47 on XLF. Now, the sector, so last week, the sell-off was mostly led by financials, such as the XLF sector, and then there were some other sectors as well that led the downside. XLC was one. XLK also did drop. XLY, consumer discretionaries. This one is Tesla and Amazon. This also led some downside. So heading into this week, XLK, I believe, is going to be the sector that is going to get that downside. So as we can see here, we have this really nice bear flag, and we lost this bullish channel. Now, team, I do want to talk about this, okay? For those of you that are part of the mentorship, I don't think I mentioned it very strongly before. And if I did, I probably didn't put a lot of emphasis on it, but I do want you to understand this concept, okay? Whenever we lose a bullish channel or whenever there's a breakdown from a bullish channel or a breakout from a bearish channel, this is basically putting an end to that zone. And you can see it this way too, okay? We can have the same way that we would trade a breakout from a zone when we are going sideways. We can trade the breakdown from this by heading down pretty much until the momentum exhausts from that two-year bull market uptrend loss. So you can see we did lose that support, and I really would have hoped to get that rally back up, that counter rally to test the supply zone there on the smaller time frames. And unfortunately, the market was so weak that we didn't even get that. So let's just take this into consideration in a very, very simple approach. Okay, team? We retested the resistance here and we rejected. We came down, and you can see this is a big drop. So as we said in the mentorship class, whenever we have really big candles, that creates an imbalance move, okay? So whenever you get these sort of bars here, these sort of large bars, you got an imbalance. Anytime you got those bars, this signifies an imbalance. So now that we have this imbalance here, and then that was followed by 3 weeks of consolidation, and then the third week of this consolidation led to this big supply bar. This means any sort of move we get, any small move that XLK sector is going to get will lead to continued downside towards this level of support at 192.3 next. So if this does happen and XLK, the technology sector, goes down, these are the stocks that are going to uh,
Oriole,
add to that downside. So we have Apple, Microsoft, Nvidia, AVGO, CRM, Cisco.
down.
Just to give you some good names here, I mean, if we look at Apple here, Apple's looking bad. I'm gonna be honest with you, team. Apple is, and here's what we're seeing. So we got the 200 SMA line that is finally seeing a breakdown from price action, and we are seeing a retest of the 20 EMA line. We are rejecting the 20 EMA line. So the way this strategy works is whenever you have the 20 EMA getting below the 200 simple moving average line, this tells you that the shorter term trend is overwhelming the longer term trend. So what this will lead to is now an expansion to the downside, with us going down to 208 first and then heading lower towards 196 area. So the reason why this would be a great level for Apple is because, as we can see, this is a major bullish channel in the making that has been going on for years and years. And to get another retest at that bullish channel, that would be around this level of support at 196. And that would be a really nice bear flag breakdown on this level here. We got drop base and then another drop down to that level. So Apple's going to be a good one to short for the rest of this week towards 208 first target, and then the second target is going to be 197. So once we come down here and the red candles are overwhelming the green candles, then the next target is going to be 197. Now the next tech stock we're going to look at that's going to lead this week's drop is Nvidia. So Nvidia, same thing is happening. As we can see here, the 20 EMA is getting below the 200 SMA line, and we had a very clear breakdown, as we can see there. Very clear, big supply candle breakdown. And this supply candle is now leading to that bear flag. So again, for those of you that are part of our team, or even if even if you didn't just join our team, even if you have been with us for some time, I do want you to take this into consideration. Make sure you are looking at our weekly watch list and you are paying attention to what we are sharing here. This is these analysis here are thought out market, pretty much market navigation trades that you can take advantage of on the current market conditions. Sorry about that, team. So if you look at Nvidia here, we shared Nvidia at 113, 114 area, and we said that we would be heading down to our first target would be I believe it was 107. So our first, 108. So we closed this week just at 109. It's currently at 107. So this has met our first target, and now it's heading towards our second target at 102.92. We shared what kind of contracts to trade. Also, we shared this June 20 100 put, and we also shared this contract here for the shorter term traders for the April 17 105 put. That is I mean, we shared it at 140 to 160 premium range as a cheap lotto, and this one is already getting close to being in the money heading into this week, with 3 weeks still remaining on the expiration. So another one was UVXY. We shared UVXY shares, and I want you to note this is still good. You can see we did get that nice upside there. So we have gotten some beautiful upside from 20 to now we're at that first target at 23. Our next target is going to be 30 plus on UVXY. That's our next target. Are these contracts okay to enter still? If we do get a rebound, Sputnik, yes, they are. If we do get a rebound, yes, they are. If we don't get a rebound and instead they just go sideways and we get a very small rebound, just enough for you to enter at an intraday resistance, you can probably pick up a little bit of a further out strike to continue to take advantage of while buying a contract cheap. But yes, you can definitely do that. And matter of fact, you could probably even look at April instead of April 17. Maybe you can look at like May 16, May 16 put, just to give yourself a little bit of time. But yeah, so far going back to Nvidia, this is what we're seeing. The next target is 102. And after that, we can head all the way down to 90 if they really do those levels. But 102 is a gap fill, and that's our next target on okay, so Christopher, I'm so sorry. You just reminded me. Team, um, I do want to note, okay, I was supposed to mention this on the S&P 500 analysis, but we just went straight into some of the stocks that are showing weakness. I do want to note, okay, there's only one news you're going to look out for this week, and that is going to be tariff reductions on TikTok deal from China. Okay, team. So remember this: the deadline for TikTok deal is April 5th. April 5th, I believe, is let me take a look at the date here, team. It may be on okay, so it's on Wednesday, okay? Sorry, no, it may not be. Give me one moment, team. April 5th. Oh, that's on Saturday. That's interesting. That's on Saturday. You know what? Here's what I say, okay? Um, Christopher, since it is on Saturday, we're probably not going to see a deal until Thursday. So what that means is any sort of pullback that we do get, any sort of pullback, you said April 3rd. I see. Interesting, Sharon. Um, but team, we're going to research that. I'll try to figure out the real date, but I'm pretty sure it was April 5th. I'm pretty sure with a good because I did take a screenshot of it. So um, if it is on April 5th, if it is on April 5th, this means that the market is going to first drop, and then if anything, it will come back up on the TikTok deal. So the reason why I keep mentioning TikTok deals because if there is a deal where China agrees to sell TikTok to the US, then that's going to pretty much give China some reductions on the tariffs, as Trump said. So if you get a reduction, that is good news for China, and the market is going to react to it positively. So that is about the only news that I can think of. There's nothing else that can possibly save the market here. And I watch every one of Trump's conferences, events. I like to watch them just to see if there's any updates or if there's any any different wording, the way he's saying things and the way that he's talking about the market. He keeps saying that there's going to be pain for the next 2 days, there's going to be pain for the next week, and he says that he's not worried about the stock market. So if you guys remember, the term back then, there was a term where they used to say, don't fight the Fed. You guys remember? Anytime somebody made a wrong trade shorting the market, we used to tell them, don't fight the Fed. That was back in when the Fed started, back in 2020. So now we say, don't fight Trump. Don't fight the tariff. Don't fight the tariffs. Just any sort of rebound you really get, try and take advantage of it to the downside, because that's really what's going to happen. So what I do want to note is one more thing. Okay, let's say that the market does drop heading into Friday session. If the market does, into Thursday session. So first we got the tariffs being, I think, imposed on April 2nd, and then let me just get the dates right. Give me one moment, team. One thing I don't like about hosting these meetings on Sundays is because usually on Sunday we end up forgetting everything, and we really have to think hard to remember. But let's see. Give me one moment, okay, team. So yeah, on Wednesday, April 2nd, we have the tariffs being imposed. Or I think no. The tariffs are being imposed on Tuesday, I believe. They're being imposed on Tuesday, if I'm not mistaken, and then implemented on Wednesday. So just note, there's really not much going on, not much good that is going to be happening to really rescue the market as far as I'm concerned. The only thing that can do so is the tariff reduction on China TikTok deal. If you don't get China TikTok deal where they let the US acquire it under a really good deal, There's nothing else. There's nothing else that can really save the market. And I think any pullback, any corrective wave back up that you get is likely going to continue to sell off, especially so team, take this into consideration, okay? Remember, we waited a week, okay? This is not just like, oh, where's the momentum to push this market down? The thing is, we already have got this pullback to 576 resistance. We've already, let's say, formulated this bear flag. So now what we have next is breaking down below 551.99, using 549.72 as confirmation towards 540 next. So 540 is the next level. Any rebound that you get, don't fall for it. If you notice that the market continues to show weakness and you're looking at the 5-minute time frame heading into this week, and you're identifying these kind of let's say you're identifying this, okay, team, you're identifying these kind of zones here. Let's just say this zone right here, and you're getting these kind of candles printed. If you see these large bearish engulfing candles printed, get ready for that downside, okay? If you see a bearish engulfing printed, short the downside for some nice for a nice job, okay? That's likely going to happen every single time we will get a bearish engulfing. As we can see, whenever we are in a downtrending market, we're below the 200 SMA line and we are trading below the 20 EMA. Anytime we get that contraction back to the 20 EMA, that'll lead to another expansion. Contraction, expansion, contraction, expansion. So whenever you get these zones broken down from, just be ready to short for another opportunity, another leg lower from the 20 EMA line. As you can see, it just continues and continues and continues to go. Something to keep in mind in bear markets, in downtrending markets, is that you are not going to get the resistance levels broken, okay? So this level here at 559, that's old news. We're not going to touch that, okay? We're not going to touch that level. If we do go back up, let's say on Monday session, somehow we push back up to 557, short it again, short the market again, because that'll lead to another leg lower. Matter of fact, even this leg right here also led price action lower. So that leg that we created into closing session, if I do go to the futures pricing, we can see that it led to another breakdown. So that is the leg here. That's that same leg that I dropped. And that was another base drop away from the 20 EMA line. So if we do get a pullback towards 560, basically this zone again, that's going to be a smart money supply zone where you are going to short it for further downside. You're going to target the Sunday lows here. And yeah, just continue to short the market. As far as I'm concerned, I don't think there's any changes that can really save us. I mean, if we take a look at some stocks here, Netflix is just barely starting to break down. Its sector, the XLC communications and streaming platform, this one you can see this sector has already been crashing. And team, whenever we get these massive supply bars, what happens? What happens when we get these massive supply bars? It never holds. It never holds. So this is not good. This is going to lead to more selling on, oh my gosh. So this is not only a head and shoulders, but this is also a double top formation. Team, how much you want to bet? How much you want to bet that this is going to fire down? When we come back to check on this within 2 to 3 months from now, it's going to be down here at 87. So let's take a look at the stocks that are in here. We got Meta, we got Google, we got Netflix, we got T, we got Charter. Charter was definitely showing a lot of strength, but I'm telling you, team, this kind of supply bar does not hold easily, and this is backed by a lot of volume, a lot of sell volume. So looking at Netflix here, it's looking very, very bearish. It looks like we are about to shoot down towards 860, and God knows from there once we retest that level. But so far, this is a clear breakdown, clear lower high structure, and that is going to retest 862 and then very likely make a new low right here at 94 on Netflix. So Netflix is likely going to lead this week's downside. Watch, you guys. Where I'm going to share this in the chat room. This is going to follow through with another massive, massive red bar. They may get a small doji candle and then another massive bar. There's a gap at 889 right here. There's a gap at 889 on Netflix. All right. So, yeah, team, you can see this is a clear bear flag on the S&P 500. Any sort of rebound that we get will likely continue to sell off. Let's take a look at QQQ as well. Now, team, this is why I'm thinking QQQ is going to crash. Are you ready for this? Look at this. Look at this. This is the weekly time frame. And take a look at this, team. What happened the last time we lost that channel? What happened the last time we lost that channel? It was bad. It was very, very bad. So we got a supply zone there. We got a supply zone, and team, it does not look good. You can see it. Tech does not look good. It looks like tech is finally going to see some big, big selling heading into this week. Um, Christopher, it's very interesting, honestly, very interesting. You know what I noticed? I also noticed that Trump on, I think it was on Friday or was it on Thursday? He's starting to host his sessions during the aftermarket to sort of um create some balance, I guess, because I think he's noticed that whenever he does talk, the market's been very, very bearish. Anytime he mentions the words tariff, the market just starts selling on algorithmic scale. Could you see QQQ coming down to 420-ish, 420? Yeah, Christopher, that is the first line of support, matter of fact. Yeah, that is the first line of support. So you remember in the mentorship, we talked about how I brought up the witches in the Clash of Titans. I talked about the witches in Clash of Titans. If you guys type it in on Google, you'll know what I mean. The three witches. The actually I found out the witches are Medusa's sister, which is very interesting. Sisters. But hear me out. In that movie, in one of the scenes, there are three witches, and the witches don't have eyes, and they only have one eye. So they pick up an eye, right? They pick up this eye there, and it gives them a vision. They can basically see, okay, through that eye. Now, the market, you can think of the market in the same way. Whenever a certain structure is broken, the market doesn't have feelings. It works on data structure. It works on market structure, Elliott's wave, the Dow Jones theory. So this right here, I mean, oh my gosh, man, FaZe, you have to give credit to FaZe. I can't believe that he wasn't short his entire account, because he talked about the Wyckoff distribution right up here. I swear to God, one of the main reasons why I mean, I already had my bias because of because of the things that were happening, the bombardment of news and all kinds of all kinds of bearish sentiment. But he was noticing the Wyckoff distribution at the very, very top when we were just at the 600s, just starting to break down below the 600s. And yeah, team, once you get that distribution, then you got so let's take a look at Dow Jones theory. Let's take a look at the Dow Jones theory first, and then we'll take a look at or why don't we type in Wyckoff distribution just to show you really fast. So the reason why I'm showing you this is because the market, when it does see that distribution, it doesn't go down immediately. What you're going to see is like you're going to see these sideways consolidations, more downside, sideways consolidation, more downside, until finally you come back down to where a prior accumulation was, and that's going to be your smart money demand zone where you move back up. A lot of you probably recognize these charts because we've studied this in the mentorship program. So but yeah, the blind witches, in that movie, basically, they think this way, okay? And the market is the same way. Once this level is lost at 464, there's no other level for the market to really rebound off of. Do you guys remember when I was so bearish around here, and our team were asking, hey, where's the next support? And I kept saying, there's no next support. We're just gonna like we were in the middle of the trading session, team, and our teammates were asking, hey, where's the next level of support? And I was telling them, there's no next level of support. That's it. There's no next level of support. Now that they lost this, it's a free fall. And um unfortunately, the same can be expected here at 468. If this level is lost here, and it looks like it did lose it in the after hours, it's currently at 463. So, right around here. If it does go back up a little bit, and then it rejects, in anyhow, there's two ways. Okay, let me just explain it to give you guys a full-on perspective on how you can trade it. So first, you can think of it this way. You can use you can use last week's candle as a resistance. Okay, if they do get above it, then what you are doing is, if it does get above it, then you're going to wait. And now here's what you're going to do. You're going to wait, and once they do break down below that last week's low at 468, then you use it as a resistance level. So once it tests it, it just instantly will go right back down. Can you please share some bullish bias? Parviz, I honestly don't have any bullish bias, man. I mean, here's what I say, okay? The only thing I can really think of is that we are selling off ahead of time, and this could usually lead to a trap operation. But aside from that, I really can't see any bullishness. And hear me out, Parviz, hear me out. Look at the RSI here, right? Look at the RSI. The RSI is not at 30% to trigger a big algo rebound. The TTM squeezes are just barely starting to sell off after all of this time, after an entire year of upside. The volume is definitely there on the sell-off. We have lost this bullish channel here, and you can see the last time we lost that bullish channel, that was, that did not turn out good either. And I honestly I can't see the bullishness in this. I can't see the bullishness, team. I think the market is bound to see more downside, and take that as a good thing, please. If you are in positions that you need to detach, it's perfectly fine to take the losses right now. Take the losses. The market is going to give you much better opportunities to buy back in at much better prices. And if you are trading stock options, much better call options. Stock. I can't speak today. Sorry, team. I just came back from a gathering. It was it was good, but you're going to get much better strikes with much better expirations that are going to give you more time and much closer deltas. So it's good for the market to really come down, exhaust as much as possible to buy those contracts really cheap. Can you share the Nvidia and SPY option one more time? You can find it in the weekly watch list, but I'll just go ahead. I'll show you some new ones. Okay, let's just take a look at some new ones. So if you want to pick up some QQQ puts, you could probably pick up, let's see, April 17. So what is that level? That's 420, right? 420. I mean, we don't expect it to go there right away, but if we were to buy 516 May puts for, I mean, they're very cheap. Take a look at that, Mohammed. You can see the 415 and the 420 for May 16. They're still very cheap. They're very cheap. This one's trading at it's currently trading at 3.60. So if the market does rebound back up, this week, you can take advantage of this particular contract. It's going to be the next printer here. So the next contract to print is going to be the 420 put for QQQ May 16s. And let's take a look at the S&P 500 here. S&P 500 contracts are really starting to get very, very expensive. But let's see. Let's target the five. Oh my God, look how expensive they are. That is absolutely ridiculous. Wow. You're going to have to go further out of the money for SPY, but you don't have to trade SPY. If SPY contracts are expensive, you don't have to trade SPY. There are so many stocks that you can short that are going to be on the cheaper end. So if I'm already holding QQQ 420 for May, just keep holding. That's right, Lice. Yeah, just keep on holding, and I think they're going to print. Well, here's what you can do, Lice. Okay, you can definitely take advantage of next week. So, sorry, of Monday session. If it's high up, you should probably expect you should expect it to get some sort of rebound, possibly if we do gap down big. If we gap down big and the market opens at 550, do expect a small rebound. But I don't think the rebounds are going to hold, and I don't think the rebounds are worth you getting out of the position and then trying to time the entry again. I think it's going to be one of those times where, because we had those 3 week consolidations, they're likely just going to print a sell-off candle and they're just going to head down. What's a good one for Apple and Nvidia? Let's take a look at Apple here. For Apple, let's see. So Apple, you can honestly buy. I mean, they got the May 16 200 put. You could probably pick up the May 16 200 put. You can even go to June. You could grab the June 195 put, the June 195 put, or the 190 put, June 20 190 put, actually. Yeah. June 20 190 put. That's a really good one, in my opinion. Muhammad, June 20 190 put. Remember this one. Please remember it. If the market gets any upside, be ready to short. Yes, sir. Yes, sir. Team, let me. Oh, yes, you guys reminded me. So another one is team. You forgot Msdr. I have to say, look, I know I didn't alert it, okay? I know I didn't alert it, but this right here was, I mean, my gosh, this one was found by Bahar Trade. And when I saw him sharing in the chat room, I shared it with the team here. And oh my God, team, this really printed. The contracts on Friday session, they were up, they were up 2000% for the weeklies. For anybody that traded the same week expirations for where is it? Msdr. This is it. You can see we called this out at the top here. And we shared two different contracts. Msdr, this is still great. Okay, guys. Msdr puts, this is going to absolutely print. So we alerted the 210 put for May 16, and we also alerted the April 17 260 put. Those contracts are up absolutely. I mean, they're printing. So if you do see any upside this week on Msdr where we head down towards like 300 or something, be ready to short for more. Okay, you can pick up the May 16 put expirations targeting the 210 put, and you can expect these to print. You can see the last time we got the massive spike, that one went from 5.0 all the way to 30.0, which is 3000. Even if we get the thing is, team, like I wish some of you pay attention to these contracts because they get such low reactions. And I'm telling you, team, these opportunities are usually really good. Like this is another one, bearish engulfing on SPY, bearish engulfing on the very day that we got the bearish engulfing on SPY. Um, we shared it, and you can see we have had two down days so far, absolutely bloody. And I'm pretty sure I shared a contract as well. Rain bonds, SPY 545 put again tomorrow on weakness. And yeah, team, we did get a small rebound. As you can see, we not only got, oh my gosh, we went all the way back up to 570, 40% retracement of that candle. If you picked up those puts cheap again, they absolutely printed. So that was another one that I was watching, the 545 for rain bonds. And yeah, those really went up a lot, team. In the last, they've gone up over 130% since then. We can see they went all the way down. They went down to 5.30 and then all the way to 10.60. But yeah, what you can do now, you can probably pick up a May 16 put, but you could do, let's say, 530 put or something. You can try and grab the 530 put on a rebound back up. If we do get a rebound back up, you can grab that put and you can continue to pretty much trade the downside of this move towards the next leg down. Next leg down is going to be, at least first target is going to be 539. So far, so good, team. So far, so good. Nvidia, let's take a look at Nvidia. Now, with Nvidia, let's see. Nvidia, we want to target 90 for Nvidia. So 90, oh my God, the contracts are lovely for Nvidia. I mean, not really, but they're good. They didn't lose much value. Pick up the 95 put, okay? The 95 put at 2.30 or 2.0. They're probably, maybe they'll go to like 2.10 if Nvidia gets a little bit of upside. I think Nvidia may possibly get a little bit of upside and then sell off on big scale. So let's take a look at another contract for Nvidia here. You could probably do the June 20 for maybe 95 put. You could do the June 20 for 95 put at 4.60. That's also a good one. It'll probably go down to 4.30. I think that'll also print. The reason why I say that, team, is because I'm thinking in the vision of this breakdown, because I'm telling you, when this does break down, it's going to get ugly. This is a bear flag, and we have studied bear flags a lot, team. Just like how we were trading the consolidations, the expansions away from the 20 EMA line. We are now trading the expansion away from the 20 EMA line, but on the downside. It's no difference really. Matter of fact, I saw somebody doing that on our team, and I want to do it. If we take a look at negative Nvidia, look at that, team. Oh my God. I'm about to do that for all of our charts here. This is negative Nvidia, okay? That's an inverse of Nvidia, team. That's an inverse Nvidia price. What do you see from this inverse Nvidia price? What is the TTM squeeze showing us here on this Nvidia inverse price? Much easier, right? That is so much easier, huh, team? Is that not? That is so much easier to now trade. We can see the next level is 105.66. And then once we break out, we're going to fill this gap at 103.17. And then this gap at 92. So I think the main target on this NVIDIA is going to be 92 there. Okay, team? Look at how beautiful that looks. Nobody else is impressed by this negative chart. This inverse, oh my gosh, that is beautiful. That makes it so much easier. Matter of fact, team, one of the reasons why I've been so good at shorting SPY here is because I've been looking at the negative inverse along with phase and Nomo and all of our team that short the downside. And you can see this is the negative inverse SPY, and the volume is increasing. The TTM squeeze is really starting to look like we're going to fire hard. And our target, like I said, first target's 540. Second target is going to be this gap at 512. Actually, wait, that's not a gap there. The gap should be right here. So it's not really a gap. The gap has been filled, but it could be a resistance level. I didn't know you could do the inverse symbol. I did not either, Charles, until I saw Bahar sharing it, and I was like, oh my gosh, there's no way. Yeah, this is really cool, you guys. I've been looking at the SPY inverse, and I've been trading it that way because take a look at the 2 minute, the 5 minute time frame. I mean, oh my gosh, it's beautiful. It's absolutely beautiful. Look at this rally base rally on it. That's basically from Friday's session. On Friday's session, as soon as that was broken out, you buy a put, absolutely print it. Another one right here. You can see that was another one right there too. Once we broke out right there, another beautiful print. And it's just continues to go on. Uh, thank God for Bahar. I've never seen body bearish. Oh man. Why is that easier to read than seeing all the red? Oh man, honestly, I don't know, Kevin. I don't know, but I think you know what I say. I think it's because it looks bullish. I think it's because simply it looks bullish, and it's something that we are very familiarized with. I mean, think about it. We got the 200 SMA line sloping up, and we're above the 20 EMA line, and we're consolidating. Allergic to red. My eyes don't see red too well, you guys. It just doesn't read red too well. Is SPY inverse chart only available on Schwab? I honestly don't know, Crafty. Not sure. I'm curious if it is actually available on other platforms like TradingView. NVDD is basically the same thing. I see. Were you able to see Crafty if we can? How do you make it inverse? All you gotta do, Brett, is just like put the dash, put the middle, the the mid dash, that little dash, that little tiny dash there, and it'll just it'll load it up. I want to see Apple team. Are you ready to see Apple? Are you ready to see the Apple inverse chart? You ready? This is why we need to short this team. Take a look at it. I mean, my gosh, look at it, team. You see that? It looks like a higher low structure, does it not, team? It looks like a higher low structure, right? On the inverse chart. So I think this is about to get some nice downside. So Apple should be a good one to short. Apple should be a good one to short heading into this week. Take turns between Apple and Nvidia. And let's take a look at again, team. This is why we are bearish on tech. Are you ready? This is why. Look at this time frame, team. Look at this time frame and recognize the similarities. Recognize the similarities in this chart. Not good, team. Not good. So the fact that we are breaking down just like that candle, it just does not look good. It does not look good. So let's let's try and take advantage of this. Let's try and take advantage of it. This way, we are not going to be trapped, and we're also not going to be buying early on. We want to wait as much as possible so that uh, we can buy the best of the best bottom possible. Anything you guys want me to look at? So please remember, okay, MSDR, continue to short MSDR, short MSDR, and this is going to continue to print. This is a bearish breakdown here, and the next gap is at 263 on MSDR. Next gap is at 263 on MSDR, okay, team? 233 is our support. And then once that support is lost, it's not over yet for MSDR. You have to know it may not be over there because let me show you what this pattern is. I mean, don't get me wrong. I am bullish long term on MSDR, but I don't team. I'm sorry if I keep like it's just there's a lot of thoughts running into my head, and I based on the sessions we have done, I feel like every little information I should try and mention for you so that you can understand why I'm thinking the way that I am in the best way possible. And looking at MSTR here, so not just MSTR, all of the stocks. The reason why I am shorting them now confidently is because I have learned to go with the momentum while it's early on, okay? Go with the momentum of the trend while it's early on. Don't wait for the market to break down all the way here and then be like, oh my God, I can't believe I didn't short. Me, I have had the experience to see this over and over and over. And this time, tell our team ahead of time, hey, they're going to eventually work their way down there in the upcoming months. And this is where we are heading to. So I can tell you MSTR is heading towards 233 and is currently at 289. So it is at 275 in after hours. My God, team, if anybody bought this swing contract, oh my gosh, they're banking. Holy crap. This stock is down another 15 bucks after hours. Absolutely nuts. And we called that out at the very, very top right there. Yes, sir. They are swing trades. I think I do mention it. I do mention that they are swing trades. Let's see if you could pick up a good but yeah, for the most part, Charles, for the most part, they are swing trades. And team, you don't have to do the same exact contracts that we trade. You could have traded the 1 DTEs on bad boy. And on the breakdown, as long as you know that we are rejecting, you could trade the short terms if you have the experience. It's really up to you. The reason why we recommend these two is just sort of give our team a little bit of heads up, and most importantly, to give our swing traders a contract to buy, um, as a suggestion, really. So the 210 and the 260 put, those absolutely printed, and I think they will continue to print from here. So MSDR continued to short it. I think Rainbond said that she was going to share an MSDR contract for us this Sunday. So expect an MSDR trade alert from Rainbond. If she doesn't, pay attention to her analysis. Make sure you guys always keep up with our market analysis and our weekly watch list. I am going to share more setups tonight there as well. But yeah, MSDR, expect more downside. This is really going to crash. I did see Mara as well. Another one of our team shared Mara. So looking at Mara here, Mara contracts don't really print the way we do, but I think now that we are breaking this $14 support level, which is a long-term support here, a 1 year out support. Now that we are finally losing it, this could really start to gain a lot of attraction on the put side, and you can trade Mara put. So I think what's going to happen with Mara, and you can quote me on this, okay, team? You can literally quote me on this because that's how confident I am. You see how the RSI is at, the RSI tested 30%. What happens in downtrending markets is the RSI touches 30%, but it's not a buy signal. It's a counterwave signal. And then right there, it's basically as soon as you got a rejection back up, or you got a corrective wave back up, this now sends you to new lows. What happens is once you break down below support, that sends you below 30% RSI, meltdown operation, and that really starts to send price action in a meltdown algorithmic selling, as we have talked about. So you guys remember, we have traded the upside on the melt up operations with the 200 SMA sloping up, and the 20 SMA 20 EMA also sloping up, and then us breaking out. Well, now we're seeing the opposite. So I want to show you this level of support here is really starting to break down. And team, I want you guys to pay attention to this pattern because you're going to see it everywhere. Okay, you're actually seeing it on tech right now as we speak. This is a drop-based rally, drop-based drop, and heading into this week, I'm expecting SPY to do the same thing. So heading into this week, I'm looking at the 551 level, 550 level on SPY. I'm looking at it to form some sort of zone like this on the 30-minute time frame. And the moment it prints a bearish engulfing like that, you better short it, team. You better short it. Don't waste no time. Short the crap out of it. And so what happens is a lot of stocks heading into this week, they're going to have these rallies, these support levels here. They're going to have these support levels. We're going to be consolidating sideways, and then they're going to break down below their support, triggering that drop-based drop formation. Okay, so our team said take a look at CAR and HTZ. CAR, I'm not sure how to feel about this stock, actually. I see this stock got some nice upside there. Um, let's take a look. First, I'll look at what kind of stock this is, but let me just go ahead and draw my levels there. So you can short this stock. You can probably short it. I don't like the volume there. The volume is very, very strong. So it's not a stock that I would honestly short. But if you notice that it comes back up right here to this level of resistance and it prints a candle like that, you can start shorting it. So instead of shorting it with the momentum going higher, short it on this one. Okay, team, this is another tips and tricks that you can take with you into today's closing. When you get these kind of moves, then start to short it on the momentum down. Don't short it when it's going up. You're going to first enter the calls early. You're going to enter the puts early, and then once the market comes down, you're going to enter calls and mess yourself up. Wait perfectly for the perfect opportunities, for the perfect signals, and then buy them. So instead of heading into Monday session, instead of focusing on, let's say, buying Nvidia call, buying Apple call, let the market see if it is actually going to give you a rebound. So once it gives you that rebound, short that rebound, because the calls are going to be short-lived and the puts are going to be the printers basically. So that's what I'm saying here. Try and take that mindset into consideration heading into the upcoming months here. So we can see car, wait for it to retest this level of resistance, print another one of those candles, and then short it. If not, stay away from it. Carvana, let's see Carvana. Um, Stay away from Carvana also, Party YD. I'm honestly not sure how to feel about calls on Carvana. Really, really not sure how to feel about this one, but um, the reason why I say that, team, is because I'm going to just completely be honest with you. I don't have a good understanding on the the whole tariffs, the auto tariffs are going to affect stocks like Carvana. I need to do my research first and then I'll come back to you. At the moment, it does look like we are breaking down. And I can tell you this, okay? I can tell you this. Who mentioned party YD? Draw this level on Carvana, okay? And I swear to God, 100%. If you can quote me on this level, okay? You can quote me on this level. I'm gonna give it to you, and you can quote me on it. Use this level here, the 200, as a support. If they lose this level as a confirmation, okay, if they lose that level heading into Monday session, the 200, you can confidently short this level for us heading all the way down to 160s again. Use the 200 level as a psychological price. And I can tell you with certainty, I can super tell you with certainty, if they fail to hold that level, it's going to get really, really bad for Carvana. So that's the monthly support, okay? If the 200 level is lost, oh my God, the overwhelming supply on this one is going to be crazy. Team, I'm going to post this because this is going to happen. I'm telling you, this is going to happen 100%. Watch it, watch. It's going to do something like that. It's going to go all the way down like this. I don't know how the supply chain disruptions are going to affect this. Um, I am curious and I am going to do some research first, but I can tell you the way this candle has closed, and based on my understanding, this is about to happen right here. I just drew it for you, team. This is going to likely happen right here. Um, Anything you guys want me to look at, team? Anything that I should go over with? Sell H. Oh, wow. This stock is strong. Oh, my goodness. I would stay away from shorting this stock. Stay away from shorting Sell H. Crowd. Let's take a look at crowd. Oh, wow. Yeah, crowd is heading down as well. Crowd also heading down. And here's why, okay? This is the understanding on crowd. We got a major supply bar. This supply bar here formulated the resistance level. Now, this one here, this massive fake out candle here, this fake out shooting star, confirmed that resistance level. Sorry, not confirmed it, reinforced the resistance level. And then heading into this month for March here, we are so far closing as a bearish engulfing there. So if I go to the weekly time frame, the weekly time frame shows that we have a supply. So here's what we had. We had this massive bearish engulfing, and then if it is followed with a bearish shooting star. And now that we have this bearish shooting star, what you should expect on crowd heading into this week or the next couple of weeks is something like that. You could probably quote me on this one too, okay, team? You can quote me on it. Duplicate. This is going to turn out like that for crowd. We're going to have a base drop on crowd for the weekly time frame. So your first target on crowd can be 318. All right, team? 318 for crowd. Remember that. Short crowd heading into this week, heading for 317 target in the next 2 to 3 weeks. Again, team, short crowd towards 317 within the next couple of weeks here. PLTR. I also looked at PLTR team. This is also looking like a put contract. But the only reason why I have been a little bit off about this one is because I don't know if Trump is going to go from peace talks to absolutely obliterating another country. And it's been a little bit hard on the defense, but on the defense budget. But I can say that I think with tech selling off, and let me show you what I mean by that, team. With QQQ, let's go to QQQ, okay, team. This is QQQ, and team, are we all on the same page on QQQ here? QQQ is about to crash here. I just want to say that QQQ heading into the upcoming weeks here is about to lead the market crash here. Now, to show you the stocks that are part of QQQ, I would like to take you to XLK. So let's go to XLK here. Now, XLK, the technology sector, this is the technology sector here. The technology sector is looking like we are heading towards 192 next on this drop-based drop formation. And if we go to analyze here, if we go to analyze, these are the stocks that we have. We have Apple, Microsoft, Nvidia, AVGO, CRM, Cisco, Oracle, IBM, ICN, PLTR, Qualcomm, AMD. And if we take a look at PLTR here, being part of tech, we are very, very, very overbought. And this to me looks like a bear flag. Matter of fact, team, I shared PLTR with the team, but here were my targets. Okay, I want to show you where my targets were for PLTR for those of you that did trade it. So QQQ, oh, you can see, team, I shared QQQ before that breakdown. I had both scenarios printed out, and very, very clear levels, very, very clear levels to trade. And I've been tagging the team to make sure that you guys are receiving my analysis. I had this level for SPY here. We did fill the first gap at 575, and this is where we rejected. We did not move towards the second gap, and yeah, we just pretty much rejected. You can see we anticipate the first gap to be filled. Now, there is a second gap at 583, but that requires more bullish momentum. If momentum on the bull side does sustain until later this week, I could see SPY push towards the second target at 583.02 gap fill. And that just never happened. As you can see, because of the tariff effects, we've continued to go down. So XLF, we talked about this one. This absolutely printed, and it's going to continue to print. This is why I think the financials are going to continue to sell off here, team. The bigger time frames are very, very bearish. Give me one moment here, team. I would like to find PLTR here. Oh, there is PLTR. So for PLTR, this was our target. We used the Fibonacci level for PLTR, and we basically, this was a success. We tested the 23%, and then we tested the 38%, which is usually the maturing level for bear flag on counter waves. And right at 96.45 at our second target, we did sell off, and this is what we have so far on PLTR. We have this bear flag here, and it just looks like we are heading down on this bear flag towards 75. And then after losing 75, we're going to head down all the way to this gap fill at 64. Now, team, let me say this, okay? PLTR has no bullish momentum. Let me show you, okay? Look at the TTM squeeze firing up. Whenever you're in a downtrend or in a selling market, and you get this kind of behavior, oh my gosh, this is bad. When you get this kind of behavior, because this tells you that the squeeze has yet to fire to the downside. By the time they squeeze, they send this to red. By the time they send it red, it'll have already come down to 75. So before it even breaks support, you can probably take advantage of PLTR here. You can short PLTR and you can make some nice profits off of this. And the contracts that I can give you are the same ones for June. You can target the 65 put at 3.50 or even 3.370 area. But yeah, PLTR June 20, 65 put, you are targeting this level right here, this gap fill. Okay, team? For PLTR. Charles, I'm not sure if I should short pan W because, oh my God, the stock is an absolute beast. Oh, it's been coming down. But oh my, yeah, that definitely looks bearish. Um, Not sure if I have the confidence to short this because I'm not familiar with this kind of stock here, Charles. But you can see that you see when you retest this level of this rising support trend line, you are meant to get a very strong reaction like this one before the week closes, or like that one. And you can see that this is a massive bearish breakdown. So I would not doubt if this does sell off on a major scale. So, team, do you see what I mean by these tech stocks? Like they're sitting right on a cliff, and I really believe that you can make some nice profit trading the momentum of the tech drop heading into the next couple of weeks here. And after that, tech is going to be one of the most amazing opportunities for the long term. Can you share your thoughts on Amazon and Tesla? Let's take a look at Amazon here. Amazon is also showing a bear flag, but Amazon could be one of those stocks that holds. I don't know, team. I don't think it'll hold, to be honest with you. Um, doesn't look like it'll hold. But yeah, sadly, this looks like another job-based drop, and it looks like we could be heading towards 177 next. Amazon's also not looking good. Definitely looks like another bear flag here as well. Take a look at Tesla. Yeah, Tesla's not looking good either, team. Tesla's not looking good either. Looks like we got a Tesla bull. Pierre predicts 113 combined market cap of Elon Musk's AI startup and XAI. And X will look tiny in a few years. So much potential. Okay, I see. But yeah, this is Tesla here, and Tesla has this bear flag formation, and it looks like we are heading down towards this gap fill at 225, team. So Tesla towards 225. Randy, I have been looking at XLI, but one of the reasons why I have not shorted, oh my gosh, one of the reasons why I have not shorted XLI is because I'm a little bit afraid on Trump's you know how he's doing some he's held he's you know he announced that he's going to sign some executive order that is going to get a lot of trees cut, basically deforestate a lot of our trees, a lot of our, yeah, and try and build more homes, or try and yeah, there was something like that, and I thought maybe that'll affect XLI or give it a little bit momentum. So I stayed out, but I do want to mention that XLI, I was bearish on it. So despite not being bullish at the moment, this was one of the sectors I was bearish on. You can see on the weekly time frame saying XLI weekly time frame being a bearish descending triangle. For those of you that wonder what a bearish descending triangle is, a lot of the market has this setup, and that's what makes it so scary, because I swear to God, team, whenever I have seen these setups, it has fired down with such a magnitude. It is absolutely scary. And this is why this is the bearish descending. The reason why this particular anatomy is so bad is because it shows a level of support, right? This is your level of support, and you are getting the rebounds at support, but then every kinetic rebound is losing more and more kinetic energy. So eventually, after so many rebounds, you're not going to have any more to rebound from. But the key bearish sentiment comes from the top. you got a downtrend line that is continuing to place lower high structures, which is a bearish sequence found only in a downtrending structure. You don't find this in an uptrend ever. So if you do find it in an uptrend, it will usually lead to a major squeeze operation when they do break out above it. And that is usually not the case. So looking at this bearish descending here, I'm actually curious to see. But I also did share the stocks here. I honestly provided a really good thought out analysis, all of the good levels here. First expecting a rebound, and then we'll monitor for volume and sector weakness. I do want to see what this particular sector is now up to. So if we go to the monthly time frame, what does it look like now? Look at that, team. It's starting to really break down. So let me go to this chart here. Oh, that's on the weekly chart. The weekly chart. All right, let's take a look. This is what it looks like, team. And you can see if you did short, over the last 3 weeks, this particular sector just continued to print. And I think it's just getting started, you guys. We are finally losing that big wick there. And below 130 on XLI, this sector can get very bloody in the upcoming days. And the stocks that are in this sector are GE, RTX, Caterpillar, Uber. Matter of fact, team, I say this, okay? I say start shorting the crap out of Uber. I really say that. I say start shorting the crap out of Uber. The reason why I say that is because they don't have the self-driving cars at the moment, and there's a lot of competition everywhere that is rising against their self-driving cars. I know the stock is really holding on well, and I think the reason why the stock is holding on so well is because they know that if this thing does crash, oh my God, this is going to drop really hard. So I think this is going to be a great short for the team. I think this Uber stock on the XLI sector can be one you can trade. Uber puts. What do you think about this one, team? I've been having problems with Uber Eats for a while. Let's short the hell out. You mean the drivers? Are they eating your food? It's funny because I used to do Uber Drive, you guys. I used to do Uber Drive and DoorDash. I used to work in a cubicle, and then right after the cubicle, I used to do Uber and DoorDash after. No joke, you guys. No joke. Um, I was, I was working really hard. Um, all well worth it though. Oracle broke down through its consolidation zone. We're going to take a look at that as well. Team, so far, are you good on Uber here? Uber puts. Are we all clear on Uber puts? We have a gap fill right here at 69. Uber puts. How do we feel? Do we need a contract for Uber puts, team? All right, everyone, please make sure you write this down just in case you don't forget later, okay? Please make sure you short Uber. Buy some swing puts on Uber, okay? Buy some swing puts and just look away. Just look away. Don't even look at them. 65 put, June 20, 65 put at 2.30 area. June 20 June 20, 65 put. June 20, 65 put at 2.30 to 2.40 area. Whatever premium you buy it at, I think it'll be good around this range because there's more to come. Let's give you a better contract as well. You could probably, you could give yourself, for those of you that like to play with time, a lot of time, you can buy the 60 put for January 16, 2026. So if you have a large account, you can buy the January 16, 2026 put, 60 put at 4.0, at 4.10 or 4.0. Team, I just want to say, okay, the same way that you were grabbing those long-term calls that you were picking up from us, I want you guys to start picking up these puts here and sell them within the next couple of weeks here, because I'm telling you, there's with great certainty, if there's not going to be any changes this week, the market is going to head lower. Like I said, we already got the digestion. We got everything we need for the market to continue to head lower. Do you think the market will start going up by end of April? If not, when do you think they will start going up? I don't exactly know when they will go up, but if I were to think about it, by the way, team, before we move on to Uber, sorry, Mohammed, we're going to take a look at, we'll take a look at this right now. I'm very curious as well. We're going to take a look at that. One thing I have learned is that to trade with the momentum, okay, team, absolutely trade with the momentum. Forget when the market is going to bottom out. Just trade with this momentum because the market has barely seen any downside. I'm telling you, although we have dropped a lot, there are so many stocks that are looking like we are about to drop hard. And taking a look at Uber, you can target Uber support at 63. This is really going to happen, team. You can hold me. Someone record this and we'll come back to this. I'm telling you, that's the type of confidence I have in regards to how the markets are looking. It's not only the sentiment, it's the data points that we have, and it's the sheer experience, team. I'm telling you, through experience, this is what we have seen over and over and over. It always happens. It just somehow always happens. So let me just go ahead and draw this level again. Um, this is it, team. We have a nice channel here. We have a nice channel. Matter of fact, it could even be a big rising wedge on the monthly time frame, probably. Oh boy, oh boy, that is a big rising wedge. Oh boy. Take a look at that, team. What do you think? Don't get me wrong. Don't get me wrong. I'm going to be honest with you, okay? If we were in an uptrending market, this is a very strong setup, and I probably would have traded the rally base rally, okay? I would have traded the rally base rally, but I think once we do take down this candle and we break down below 65 on Uber, this is where the stock will finally show that it's ready to break down. So I'm thinking maybe heading into this week, that's when we are going to get that red candle here. So make sure you do enter ahead of time before that candle happens. Okay, team? That way, when we do get that downside, we can decide if we are going to remain in that trade longer. By drawing that there, team, does that not look more probable? Does that not look more probable based on the current market conditions? It really does, right? And this only takes us down to 65, which is our target, the easy targets. Looks like a wick-off distribution. Oh boy. So team, remember this one, okay? Uber puts. I gave you two contracts. We got, if you're a bigger account, you can pick up a January 16, 2026 60 put strike at 4.0, 4.10, or you can do a short-term expiration. Let's add another month. Sorry, do not buy the June, team. Do not buy the June. Forget the June expiration. Buy the July. Buy the July 18 65 put at 2.80. The July 18 to July 18 65 put at 2.80. All right, team? 2.80 to 2.60. We got this one, team. We got Uber. We got the Uber trades. So we got the July 18 65 put, and then the January 16 2026 60 put on Uber. That's a swing trade. Yeah, Mohammed, it says 305 right now, but I'm taking it into the consideration that there's going to be a little bit of upside. There's going to be a little bit of upside this week that may bring the premiums that way. And even if it does, even if you do buy it at 3.0, that's still good. That's still good. You can probably even out your contract by adding another contract, by averaging it out, and then closing that contract with let's say a fair amount of profit, and then leaving the second one longer. QQQ swing puts again. I don't have anything for, there's not really much recommendations, Randy, but I do want to say this, okay? I'm going to give you the level, and I want you to trade it the way that you want. I can say this with absolute certainty. QQQ is about to get destroyed here. about to drop. And you can take a look at the past here. It's no different here, okay, team. It's no different than seeing that red candle there. Whatever little upside that we get expected to sell off that way. And the only time that I'm gonna really start going neutral a little bit on the market is when we retest the 20 EMA line here on the monthly time frame. So looking at the monthly time frame, my target on QQQ is 450, okay? 450 on QQQ. That is where a lot of demand is sitting at 454. So 450, let's just say 450. 450 is going to be good demand, but I just want to say this, team. I don't think we will hold. I don't think we will hold considering the sheer momentum we have here. So um, I think QQQ, if you get any sort of upside, it will be good to continue to short. I think we shared a good amount of contracts here, team, and I hope the team is ready. I know a lot of our team was also talking. We're also talking about IWM. Oh my goodness, that looks scary. That looks very, very scary. Looks like IWM is heading towards 190 next. IWM towards 190. Our teammates said Goog. Let's see, Goog. Oh my bloody hell, that looks horrifying. Oh my gosh. That looks terrible. Oh my goodness, that looks bad. I mean, it could get a small counter trend rebound to like 162, but I just maybe that was the breakdown. Maybe that was the breakdown, and we're gonna head down to this level of support at 149. But yeah, that's not looking good either. Looks like this one's leading the sell-off early on tech. Um, But yeah, team, see, that's what I'm saying. We could expect the same thing from the tech sector. Any rebound that we get, expected to sell off more. Okay. When we lose the bullet channels, it is no different than us losing let's say, a zone, a supply zone or a demand zone. We can see that losing support of this zone and this going on a sell off. Team, that's about it for me. That's about it. I'm sorry. I know I wasn't prepared for today's session. I came back from a gathering. My brother came from out of town. He lives in Sacramento. He came here with his wife, and it's been great. I've had a great time this weekend, and I was really hoping that I would be able to make it home on time. Like I said, I really want to be very, very consistent with the team. I'm like, I'm going to be very, very consistent with everything that I try to do. I'm going to do it, especially for the mentorship classes. I'm really going to be there every Tuesday and Thursday to make sure that the team is learning, and that you guys are not going to be discouraged, or at least going to continue to get my guidance on market conditions. Thank you guys so much. I really, really appreciate it. Um, Can you please upload this after? Yes, sir. We'll upload it on YouTube. I'll post it up on YouTube. We'll share it in the chat room as well. I hope we make some really good profit this week, team. Um, let's try and take advantage of this market downturn. And please note, okay, I do want to show you. Matter of fact, let's go back to 2018 really fast. Um, 2018. So this is the 2018 sell-off right here, team. You can see we were making historic all-time highs, and the same thing happened. Really, we got that pullback. The only difference is back in 2018 when we did sell off, um, we maintained we maintained the consolidation really, really well. And I'm pretty sure if you had seen it at the time, you would have traded that bullish engulfing there, and you would have traded it towards that resistance level again and made some really nice profit. So that held really, really well. And you can see, team, anytime in the past as well, whenever we get these massive supply bars, this right here, this consolidation that we are looking at right here, I don't see that. I don't see this particular candle being any different than this one that we are printing right now. So if I go to SPY on the weekly time frame here, this candle here is no different than seeing that candle there. So I really think the same thing is about to happen. Whatever happens, we get any upside. Whatever happens, if next week's candle, if this week's candle is going to close below this recent week that we had, below 555, we are heading lower. We're going to continue to head lower. So this right here, this setup is absolutely no different than that setup here. So, and I do want to note, when you have a supply zone or when you have a demand zone, the least candles you have, the stronger the zone is. So if this zone broke out early, it just means that this zone is that strong. Thank you so much, team. Really, really appreciate it. That's all for me. I'll see you in the live trading room first thing tomorrow morning. Let's make some nice profit. Um, Please don't forget about the Uber put. I did want to look at a few more from the industrials because the industrials is looking a little bit bloody. RTX is at the very top, but I think this is running out of momentum here on this double top. RTX could also be another one to short. I wonder if, oh yeah, the contracts definitely do have a lot of open interest. You can definitely short RTX as well. RTX is another put. I'm going to share it um, in the Discord weekly watch list as well later on, sometime later tonight. But yeah, team, that's all for me. I hope you have a wonderful rest of the day, wonderful rest of the night. Let's see where the market goes by tomorrow morning. And whatever rebound we get, just remember, I better not hear anybody say, "Oh, I wish I bought calls at the very bottom." Please do not say that. You're gonna screw everybody over. What I mean by that is like you're going to create some sort of emotional some you're going to build some emotions for the team, and that's going to make them be a little bit bullish where they're going to think the market will go up. Just let it go up, let it do whatever it's got to do, and just patiently wait for another beautiful signal to tell you that the market will continue to head lower. Like I said, it's very easy. You don't have to like see what's going to happen tomorrow. Just pay attention to the 20 EMA line, okay? Tomorrow morning. Trade it this way, okay? Once we come back to the 20 EMA and we print a bearish engulfing on the 5-minute or the 2-minute time frame, you can trade the expansion down on that move and you can scalp it that way. But yeah, that's enough. That's enough for me. Um, don't want to waste your time any longer. I really, really hope that you got something valuable from today's session, and I look forward to seeing you in the live trading room tomorrow.